Good evening, fellow traders, and welcome to another nightly edition of Stock Market Money. Stock market research and technical analysis you can trust. We'll begin with tonight's story of why the markets are in turmoil and what your next move should be for tomorrow. Okay, enough of the kidding, guys. Welcome to another nightly edition video here. I shall begin with the grandeur. I said the word grandeur. Hashtag joyant. Hashtag jubilant hello to all of my good friends who decided to come by and see me tonight. I appreciate you. Now, there could be a lot of new traders out there wondering, what was that all about? Okay, it was actually a joke about a CNBC special. It seems like every time the market pulls back like 1 percentage points, they are doing like a Markets in Turmoil special. Now, the inside joke is every time they do a Markets in Turmoil, that marks the bottom of the market. So maybe I'm subconsciously trying to mark the bottom of the market. So I really don't think the markets are in turmoil. They're not in turmoil, so it's just a joke. So I will begin tonight. By the way, my name is Doug, and this is Trade with Doug, if I didn't formally introduce myself to all the new people. We're going to talk about this market here, and I do have a short on it, and I only have one because I believe at this moment the risk to reward favors that, and the probability of a deeper pullback is good. And I did that yesterday. And I'm going to tell you why I did that, and we're going to talk about why I went through the short and why I think that way. Now, if you go back to like 5 videos ago, I was saying that all the indicators pointed to this market was short-term overbought. Now, one thing you new guys have to understand, new traders, guys, gals, is that pullbacks in markets and corrections are healthy. You need those to test the authenticity of the rally. And if you look at the SPY right here, I've got it up since last year, you've had multiple corrections in this secular long bull market. So you see it goes up, pulls back, goes up, stocks go up, stocks go down, stocks go up, they go down, up, down, all the time, over and over again. So it's been a while since we've had a really authoritative pullback, especially in the S&P. Now, when I talked about that video, I said, we had a pretty big run here. It was like 16 days straight of green. Don't quote me to the exact number. I know it was a lot. But more importantly, it was about 8.5 percentage points that we went up. That could be considered a really good year. At least in the old days, it could be considered a good year. So when you combine an 8.5% rally, I think it was 12% at the peak for the year, that's an awful lot. And if we were to expand that out for 4 quarters in the remaining parts of the year, then this is saying the market's going to be up like 50%. I don't buy that. That's quite a bit. I'm not going to say it can't happen, but you're going to get some sort of back testing. And we left off with the market mutterings, I think, over the weekend, talking about how the market hasn't done anything at all over the last 3 weeks, that every piece of good news, every piece of big tech earnings, the Federal Reserve meeting, all of these great positive news, vaccines, coronavirus recovery, didn't do anything to lift this market up in its next secular leg. Now, maybe it does. Maybe we just get a pullback and a really sharp move upward. But I think the next cycle in here is the market is wanting to test lower prices. So I'll show you what I'm seeing. Agree, disagree, like, dislike. It's okay. So yesterday, I went ahead and got a short here, roughly a little over 418. So I've got like $2 into this trade. To me, that's very little for what the potential downside could be. Now, I'm not saying there's going to be a crash because I don't think there is. Markets don't crash for all-time highs. So like the fear mongers that think that's coming, I seriously doubt that. You won't see that. But a nice little pullback that maybe takes us down here towards 390 is probably what's in order, at least a test of 400 is to move back and test some of this recent rally. Now, that might not happen. It's not like the best short setup I've ever seen. I just took it from a risk and I'm looking, okay, I'm going to give up $2 and I'm going to get 20. I'm not going to be in those types of probabilities every day of the week, so I'm okay with whatever happens. And I'll probably move it down to break even here, so it'll be a free trade tomorrow. Where it sits right now, it just kind of traded aggressively right into major support. So some of the stuff we talk about all the time is that there are no randoms in the market. That the market trades from one level to the next level. So if you take a look at the intraday 5-minute chart, we began very aggressive, sold off very aggressive here, and you found right into that 412 area a low, and now you're bouncing off it. No surprise that you're bouncing off of that area when we kind of confirm what does that area mean to the chart. That's actually a very important area because that's been the low where we left off yesterday. I think it was in the video, or maybe it was Sunday's video. That was the level going forward, 412. You have 1, 2, 3, 4, 5 days of testing, an entire week tested that area and held, and here you are touching it again. So two things are going to happen here. This either becomes the support and holds for the remainder of the week and begins to just build back up and move closer to 440s, or this level breaks and you start exploring the lower levels right here, which is sub 400s, like 390s or something like that. Now, just because it breaks 412 and trades down here does not mean it's just going to instantly roll right down in there. But I would closely watch that. If you get too much activity under 412, you're going to want to pay attention to that, because that could start to ignite some selling and some panic. So pay attention to that. Now, when we look at the Qs, you have a completely different story. This thing is far more aggressive than the other. Now, it's always has been, but you see what happens when something breaks support, and whether this becomes a leading indicator remains to be seen. But you look, it had the same chart as the S&P, 5 days here. It had its hold, I think it was like 335. But look what happens as soon as it breaks. So when you traders are out there looking for expansion moves, where does an expansion move come from? It comes from the tighter the consolidation, the tighter those ranges, they coil and compress. And as soon as an asset breaks above that or below that, you get an expansion move. So if you look back here, you had a very tight period of consolidation. You finally move outside and you go into an expansion zone. And that's what you get there. So you get a very aggressive rally. And those are what you're looking for. So this looks like it's going to go a lot lower. Now, this is not too much of a surprise to me, because we have been talking about, over the last few weeks, the internals. And I don't know exactly what day it was, Wednesday, Thursday, or Friday. I can't remember. But the market was making the Qs. I'm talking about the NASDAQ, tech sector, growth stocks, and such. Out of the 100 names listed inside of the NASDAQ 100, 89 of those were red for the day. But yet the NASDAQ was still at highs. Many of those names were trading below their 50-day moving averages, which is considered very bearish. So when you looked at the market, if you were just looking at the market, it was telling you it was really, really bullish. But when you started to peel the layers out underneath and you started to look at the internals were telling us a different story. It's like this market isn't matching up. Now, we're still in some sort of sector rotation, because you see the aggression here on the Qs. You see it there less on the SPY, but if you go to the YM, which is the Dow, it's on another planet right now. It's not where this one is. It's very, in fact, this one still looks seriously bullish, like it's just one step away from a flag breakout, and maybe you actually see that. So there still is this sector rotation where money is moving into Dow 30 stocks, things like Caterpillar, Boeing, John Deere. I mean, these have incredible years. While these growth stocks, speculative stocks, have really taken a beating. And some of them were some of my favorites. Fubo, F-U-B-O, Vuzi, V-U-Z-I. Some of these stocks are just getting crushed and continue to get crushed. So keep your eye on that. So going forward, I'm not going to make any specific names here, because I think stocks are hit or miss right now. Maybe you get the good stock, maybe you get the bad stock. Like I said, if you're trading just NASDAQ 100 stocks, 89 of those are red. The index can be higher for the day, but your chances of picking a loser in that is high, because so many of them are red. And I think we have this mass exodus from growth. So I would stay away from beta right now. Big beta, Teslas, Googles, if some of you even trade that, or some of these other like Shop, Restoration Hardware, just some other names there's a lot more. Look at the beta. If you've got a steep beta name or aggressive stock, stay out of it, because it's probably going to have a lot of whipsaw action and wild moves, and you don't want to subject yourself to that. Dow stocks seem to be the way to go right now, if that's your long poison. For me, I'd like to see this market pull back a little bit. And like I said, you guys will learn to appreciate market corrections more as you trade longer. They're dynamic opportunities to make money. We all want that. That's why you see so many traders wanting that, because we want a discount on prices. We like to show up and see red tag sale everywhere so we can reload and make lots of money. When you're starting out buying at high, you're kind of pressed towards the ceiling. You're pressing towards resistance, and much of your reward is being taken out of the market. So that's never a good thing. I'm going to make it nice and short, guys. I really appreciate you tuning in to Market Mutterings tonight. Market Mutterings. I hope you had a good time. I hope you're doing well with your trading. At any time you need help, reach out to me. If I didn't say it, thumbs up the video, subscribe to the channel. Until next time, trade well.